and lovely to be here with you again. And from the last time I sat here a year ago, when I was Vice Chair at KPMG, I've now moved on. I'm in the House of Lords and taken up a government ministerial position. So it's lovely to be back in FinTech and actually dealing with issues of financial services rather than my day-to-day job. So thank you for having me, and thank you to my panelists for being here with me. Now, innovation and digitization in the financial ecosystem, there's a huge prize to be had. It could be transformative, not just for financial services, but for the economy as a whole, communities, and indeed the broader definition of society, so that our businesses really can have some benefits. Now, we're already seeing some of those benefits. We're seeing the benefits of open banking. We're seeing the benefits of faster payments, digitization of various systems. And indeed, for me, digital assets and tokenization will be a holy grail going forwards as to how we make this work. There is a lot to play for, and I do believe that we are making some progress, but I've got two experts here with me who can help us unpick where we are making progress and where we've got lots of work to do. And so, will fintechs play a big role going forwards, or have they done their bit? This is the type of question that we're going to try and explore in this session. So the two experts with me from the UK and the US, I have Antony Jenkins here, known to many of you as the CEO of 10x, and certainly for me, that's a really 10x banking even, give you the full title. I've known Antony since his days at Barclays, but he's a stalwart of the financial services sector. And indeed, he's joined by Adrienne Harris, who is the Superintendent of New York State Department for Financial Services. I think I've got that right without checking my notes. So welcome to both of you. And I'm going to kick off with a question to you, Adrienne, on the basis that we're about 15 years plus from the financial crisis. So 15 years where fintech have been seen to be part of the solution post that big event in financial services. So what have we seen? Have fintech achieved their peak, or is there more to come?
So I think there's more to come, but if we think back 15 years ago and we had the financial crisis and then there were so many fintechs coming on the scene, and if folks remember, fintech was coming around and they were going to disintermediate every bank. I would sit when I was in the White House and I stood up, in the Obama White House, stood up a intergovernmental working group on fintech. And fintechs would come in and they'd say, oh, in 10 years, Citibank isn't going to exist. Barclays isn't going to exist. We're going to disintermediate everything. And then what happened is I think they discovered that customer acquisition is hard and expensive, and that compliance, that regulatory compliance is hard and expensive. So what we've seen is now fintech become more part of the mainstream, more part of the infrastructure, more an enabler than a disruptor. But I think there's still a lot more to go there as fintech continues to be integrated into mainstream financial services.
So, Antony, following on from that, are you seeing the beginning of the end for fintech or the beginning of the next phase?
Well, frankly, it's quite unclear to me whether we are at the end of the beginning or the beginning of the end for fintech. If we go back over that 15-year period, we've certainly seen many benefits of fintech, not least because it's put pressure on the incumbents to up their game. Now, most people in this room will have a bank account with one of the established players in this country if they live in the UK, and I suspect most of them will have a bank account with one of the newer players. So there hasn't been a substitution effect. There's been a complement. But frankly, you know, where's the benefit? Where's the benefit to consumers? We've got a slightly better user experience. I mean, I went onto my phone and paid a bill before I came here. That's great. I don't have to write a check anymore. But you know, has it really changed our lives in the way that technology has affected other areas of our lives? And I would say not. So the question is, are we still going to be, in another 10 years, if we were having this conversation, are we still going to be in this incrementalist phase of progress, or are we going to see some radical breakout change? And that could come either from the fintechs or the incumbents or both. But the other actors in this, of course, which we have talked about and are also important, are the role of the regulators, are the role of government. We had politicians on before talking about that. If we really want to create a financial system that is 10 times better, then we're going to have to be a lot more radical than where we are now. And just so we don't gloss over that, because sometimes we can think about that in terms of creating unicorns and IPOs and all of that. The real prize here is for society, because financial services is the biggest single sector in the society, but it also supports everything else that happens in society. So if we could collapse the time it takes to buy a house to a tenth of what it takes now, if we could collapse the friction cost in the financial system so people pay less for money when they want to buy a house or start a business, if we could collapse the friction so people get a better return on their savings, if we could create transfer in financial markets which was truly instant, of value both ways, there would be a massive economic prize. And in a world, in this country and in other parts of the developed world, where we're all seeking economic growth, where we're all looking for productivity, that is a huge prize to play for.
And I think interestingly, and I think that's absolutely right, thinking about how we remove the friction, because it really is the financial services system that sits at the foundational layer of the entire economy. But then I think from a regulatory perspective, how do you make sure those gains are spread equitably?
Absolutely. Yeah, absolutely.
There we go, and that was the segue. I am currently responsible for the strategy for reducing that time of buying a property in the UK, and how do we digitize the system end to end. So anyone in this room who has any suggestions, any answers, please come and find me in my day job. But it's certainly, for me, the actual real prize is very much about that transformative nature of the work on communities, on businesses, and on the economy as a whole. So with that in mind, have we reached a new equilibrium? The issues for me are that the fintechs are often selling to the incumbents, and therefore collaboration is really important. It's often not one or the other, it's a mixture of both. Is there a new equilibrium? Have we got a new system now that's emerged, Adrienne?
I don't think we have a new system so much as we have a marginally improved system. We're starting to see efficiencies, a better user experience, but the system itself hasn't been disrupted, hasn't changed, it hasn't become more equitable. You know, one of the promises of FinTech 15 years ago was financial inclusion, right, and more equity in the democratization of finance. And we've seen that in some ways. You think about the Robin Hoods, crypto maybe to a lesser extent, but that real promise of financial inclusion has really yet to be realized. We are just making incremental or marginal improvements around a system, but I actually think that's perhaps not a bad thing. Because of the role that financial services plays in the economy and society, it's not a thing that necessarily you want blown up and started from scratch very quickly, right? To make those slow incremental changes, to understand how technology can be woven through an existing legacy system, I think can be beneficial rather than completely disrupting a system, the financial services system, and therefore the entire economy.
So Antony, you set up, when you were at one of the largest banks, a section of it that actually collaborated very intensely with the fintech world. Do you think that that's reached its optimum position, or is there more to be done helping incumbents and disruptors actually work collaboratively?
Well, I think the one thing that we've learned in the last 15 years is we tend to talk a lot about technology, but this is really about people. And people's method of operating and their comfort with that and their perception of risk of change. And so one of the things that the fintech community can do for the incumbents, as we do in my business, is provide pathways that allow them to accelerate their journey to delivering a much more impactful experience for their customers. And I think the reverse is true. In many ways, this question about equilibrium comes down to the simple fact that we've sort of done the easy stuff. You know, and don't get me wrong, it's not easy building a neobank. It's not easy building a, FX payments capability. But it is easier than the sort of financial transformation we talked about. Now, you mentioned buying and selling a house. The technology exists today to solve that problem. It absolutely does. You just need to be able to tokenize the property, but you also need to be able to effectively tokenize identity. And these things are perfectly possible to achieve. If you had the tokenization of both, you'd be able to have the instant exchange of ownership digitally and cryptographically protected. Now, identity is a controversial topic because we all say, well, I don't want the state to know, who I am. But the state already knows who you are, right? The state confers physical identity on us when it gives us a passport or a driver's license, identity card in some countries. The state confers identity on us physically. Why can't the state confer identity on us digitally? Because that would avoid all the nonsense that we have to go through when somebody says to me, you want to open a bank account, oh, can you please send me a utility bill? Who's got a utility bill? A paper utility bill? Has anybody got a paper utility bill in this room? Because I haven't. And you can't print one off from your online banking. And then you've got to get a photocopy of your passport, blah, blah, blah. So, and then you look at the land registry, where over time we have effectively created a record of holdings of property, but we haven't gone to the next step to say, let's tokenize that. And by the way, this question of digital identity means that lots of things would be easier. Getting a job. When I employ somebody in 10X, I have to check their educational qualifications. That costs me £80 because I've got to go to some service bureau who then has connections with all the universities, and then there's massive paper exercise. Why couldn't we just tokenize educational qualifications that sit alongside your digital identity? You could do the same with healthcare records. So, when you're visiting your relations up north and you're taken ill, you show up at A&E, they don't have to take your medical history because they can look at it. Now, there's lots of concerns about privacy around that stuff, but what I'm saying is, if we really want to be transformational, we're going to have to get a lot more radical in our thinking, and that's all about people, and it's all about how we perceive risk and how we manage risk. And I think our colleagues in the regulatory community, and full disclosure, I am on the board of the PRA. I'm not talking in that capacity at all, but I think the regulators have been forward-thinking in much of this. I don't see them as an obstacle here. I see them as potentially a very strong partner for this work.
Now, you're both in mature markets, and we see the value of fintechs and the growth in the fintech sort of provision of services across the board. But what is the influence in some of the rest of the world in terms of some of those more emerging markets? Can we be more transformative, as it were, in some of those? Maybe to both of you, but maybe you might want to start, Antony.
Yeah, I mean, the developing world is not waiting for us, right, to come along and help them with their financial system. For 20 years, the Kenyan economy has been powered by M-Pesa. It's had a massive effect on economic growth there. If you look at what's happening with digital payments in India, for example, these things are all happening because people have leapfrogged several generations of technology. Just like with telephony, nobody's putting fixed line telephony into countries in Africa. We don't have to because a better technology exists, mobile. And again, it's an example of what you can achieve when you're radical. M-Pesa didn't come out of the banking industry, it came out of the telecom industry. Vodafone and Vodacom and Safaricom in Kenya found a way to use text messages to transfer value. They weren't encumbered by all the thinking that people in the banking industry had. So we can look for different parallels and different models in the developing world that should inspire us to be bolder in the developed world.
No, I would completely agree. The benefits of not having the legacy system, I think we've seen, and M-Pesa is the classic example. But even when you think about some of the way finance works in the developing world, even in an analog sense, when you think about microfinance or microinsurance, and so many of the companies we see coming out in fintech are just imitations of this analog way that financial services works in the developing world, and now is being digitized or having tech added to it. And so we're taking those examples from the developing world and putting them in the form of tech for the developed world.
But it's interesting because in the US, as we were saying before, I lived there for a long time. I still have a bank account there. There is still no faster payments in the US. We all sit here, we pay our gardener or our cleaner or whatever, our grocery bill or whatever. In the US, you can't do that. My bank still cuts a paper check. and mails it to somebody that I have doing things for me over there. So the developed world is encumbered by its legacy infrastructure, and I know the US is moving to faster payments, so I don't want to be...
It has been for a long time. I've been trying to do that for a long time.
But it's also encumbered by a lot of legacy thinking and a lot of entrenched positions, and frankly, people making money out of that.
Yeah.
Friction, friction can be good, but friction creates risk and it creates cost. And the people who are paying for that are the average person who's making, $30,000 or $40,000 a year in the US, right. £25,000 or £30,000 here in the UK. They're the people who are paying for the massive inefficiency in the financial system. And frankly, we should be doing a better job about it. As the FinTech community, as the incumbents individually, collectively, and partnering with regulators and government.
So in terms of, we've seen all sorts of new technologies emerging. We've seen all sorts of efficiency gains, maybe not as dramatic as you would like, maybe not as transformational as we could be. And so I think the challenge is there as to how we can think bigger maybe. But where would you say the next innovation, the real innovation for FinTech is?
Well, of course, everybody's talking about AI all the time, often without really truly understanding what it means. But I think both for institutional finance and for retail finance, there's so much there to be explored. I think with digital assets, tokenized assets, we are the only prudential regulator of virtual currency in the US. And we see that our model for regulating that has grown the market there in New York more than Silicon Valley, more than Miami, more than other markets. And it really has become the model for regulators here in the UK, in the UAE, and in Singapore, and elsewhere. Similarly, we're doing a lot of work around AI. We just issued a circular letter on AI and insurance. So I think there's certainly lots of risk when we think about AI or when we think about digital payments. But there's lots of potential benefits there too, but I think it does require the private sector and the regulator to see eye to eye about the potential benefits and risks and to collaborate and work to make sure that those gains can be realized and realized equitably.
Antony, is this all about AI or are there other things we should be looking for?
I'm a bit of an AI skeptic, to be perfectly honest with you. AI and machine learning have been around for 40 years. Their capability is clearly increasing at an increasing rate, which is important. I think there's lots of tactical use cases for AI. Automation of writing code, automation of testing code, chatbots for customer service, all of those things. Of course, one has to be careful about some of the downsides, bias, and so on, and I think that's important. But of course, one of the things about AI is you need to have a very powerful data set to be able to run the algorithms on. And let's face it, most financial institutions just don't have that because their data is incredibly fragmented across many, many different systems. That's why 80% of data scientists inside financial institutions spend their time just cleansing data and trying to get it into a place you can do something useful with. So if I were to answer the question about what are the next big frontiers that I think we should really look at, I think the most interesting thing here is that the fundamental processing power of technology is increasing all the time. We all talk about the pandemic and how we all worked from home when we talk about Zoom. It's really got nothing to do with Zoom. It had a lot to do with the fact that we had broadband going into our houses, right? Now, that plumbing now exists in the world. We've got to leverage it. And I would say there's two things that we should think really hard about. One is this notion of digital identity. And the second is this notion of centralization and tokenization. Because if we can do those two things, then we can take that friction out. Much of our financial system, as you were saying, is basically an automation of the 17th century, when people in the City of London would go to coffee houses and exchange bits of paper which recorded financial value. And all we've done is automate that. Now we've got a clean piece of paper. How would we do it differently? Would you really have a central bank and a series of clearing banks and a series of banks that use those clearing banks if you were starting from scratch? I'm not sure you would. So we've got to think bigger.
Adrienne, any final remarks?
No, I would agree wholeheartedly. And I think the point you made about incumbent financial institutions and their data is an important one. It's less they don't have the data, they do, but it's fragmented. And so when we think about those technologies, those fintechs that are going to most disrupt and most help us go to the next frontier. I think it will be about how we bring that data together, how we cleanse data, how we think about data governance in a way that unleashes a number of other innovations in the space.
So we have to think about innovation in terms of the data itself and the technology that then powers it, but also how we get to not just an electronic form, but actually potentially full digitization, so tokenization of assets, tokenization in a way that we probably haven't thought about it so far. So I look forward to hearing your thoughts on how I tokenize my property market, and indeed for anybody else in the audience, I challenge you to also think about how we take those next big steps so that FinTech really can be that transformative power for the ecosystem and for society as a whole. Thank you to both of you for joining me today, and thank you for listening.